The price of Bitcoin is once again hovering at around the $30,000 mark. Does this mean that we are witnessing bearish sentiments in the cryptocurrency market? Well, let's talk about that. So why not stick around to the end to know more about the current situation of the crypto market and to know whether it's the right time to invest in cryptocurrencies considering the low prices? Before we begin, make sure you check out the description below for some of our recommended crypto websites and wallets. After being valued at $2.2 trillion in market capitalization during late March and early April, the total market capitalization of all major cryptocurrencies has fallen down to $1.5 trillion. And that's not very positive news. The largest cryptocurrency by market cap, even today, is Bitcoin, despite all its flaws. And that clearly shows investors' trust in the very first cryptocurrency ever to exist. On May 11th, Bitcoin was hovering at around $30,000, which means it's more than 50% down compared to its all-time high of $69,000 last year in November. Maybe 10 years ago, if you were to tell somebody that Bitcoin would reach that kind of value, well, nobody would believe you. But right now, that is not the case, and that clearly shows how far cryptocurrencies have come ever since the inception of Bitcoin in 2009. Cardano's founder, Charles Hoskinson, said that the ADA token is in a bear market. This was as a result of intense selling pressure. Hoskinson said that even if all the fundamentals are right, even if the Cardano protocol is getting faster, more decentralized, with a bigger community, and even if it becomes the most advanced technology in the world, nothing can stop a bear market. Not even a huge announcement can make big waves in the cryptocurrency market right now. There are several concerns about the response of global central banks to elevated inflations, weakening the global growth outlook considering the current geopolitical scenario, which took a toll on U.S. and global equities in the recent weeks. Today, cryptocurrency markets have a very close correlation with equities, which goes a long way to explaining the recent bearish sentiments in the cryptocurrency market. We have ARK Invest's Cathie Wood, who thinks crypto is nearing the end of the bear market. And she also predicts a huge explosion of blockchain technology. The reason why she thinks this way is because of the increasing correlation between crypto and traditional assets, which indicates that the bear market will soon be over. Cathie said, quote, "Crypto, a new asset class, should not look like the NASDAQ, but it does. It's highly correlated right now. You know you're in a bear market and maybe close to the end when everything starts acting alike, and we're seeing the capitulation of one market after the other. I've been around in the business for 45 years, and I've never seen the opportunities I see now. According to our expectations, truly disruptive innovation, which right now is valued in the global public equity markets at roughly $10 trillion, roughly 10% of the global equity market cap. So how can you predict a bear market? Generally, it is really hard to predict a crypto bear market based on previous trends. But with the stock market, that is not the case, because the stock market has existed for decades now, and the crypto market is relatively young. So it's easy for investors and analysts to predict a thing or two about the stock market. You witness a bear market when the value of cryptocurrencies has fallen to at least 20%, and it continues to fall. This downward trend will affect investors' interest, followed by panic selling that will bring down the prices of assets even lower. You will also see a decrease in price over a sustained period of time. You will also see that supply is greater than demand. You'll also witness lack of investor confidence in the market. Finally, the highest price will be much lower than previous highs in the event of good news and lower lows in the event of bad news. There will be general distrust in cryptocurrencies among investors, economic analysts, and traditional finance. So what exactly triggered the bearish sentiments in the market at this time? Well, there are several reasons for that. The first one being the Fed interest rate hikes. The Federal Reserve raised interest rates 0.5 percentage point recently, and Wall Street responded with a stock slump. Crypto markets have followed suit, shedding more than 10% or almost $200 billion just between the last week of April and the first week of May. Edward Moya, the senior market analyst at Awanda, said, "Bitcoin is really stuck in a sideways news cycle, where you're just waiting for it to be calm on Wall Street, and then you'll see more people confident in investing. I still think there's a lot of long-term potential value here, but you have to be able to stomach this volatility." The next reason would be the fact that the institutional interest in cryptocurrency is now starting to cool down a bit. When you look back, 2021 was an extremely bullish year for cryptocurrencies, especially when it comes to institutional crypto investment. It's unfortunate to see the same enthusiasm is not being carried over to 2022. We had companies like Tesla, MicroStrategy, and several payment platforms getting into cryptocurrencies that helped in driving the momentum and buying pressure. U.S. regulators even allowed the first Bitcoin futures exchange traded fund to trade, which was also quite bullish. Maybe mainstream adoption is taking a lot longer than what people originally expected it to be. And finally, this time, investors are playing it safe. because they are reacting to what is happening in the broader economy. There is more confidence in traditional assets with the recovery from the COVID-19 pandemic, as there is an end to several global restrictions which were put in place before as a response to the COVID-19 pandemic. According to Chris Klein, co-founder of Bitcoin IRA, some crypto investors are weighing other options and moving their money back to the dollar as a starting point and then seeing what they're going to do from there. The crypto market has matured enough to be affected by the existing market sentiments in stock markets because cryptocurrencies are now a global financial investment tool. So whatever is affecting the stock market might also in some way affect cryptocurrencies like Bitcoin. So in short, the crypto bear market is a result of a slight downward trend in pricing. And when the prices continue to fall, investors will lose confidence and will sell all their assets as soon as possible. Things like war, pandemics, slow economies, and political crisis will also trigger a bear market. In the case of cryptocurrencies, even government intervention surrounding cryptocurrencies will also trigger bearish sentiments. Now, you might be confused whether to invest in crypto right now. Those who are stepping into crypto for the first time, or for those who want to invest more into crypto, the bear market might present itself as a great investment opportunity. The lower prices might be a great entry point for everyone who wants to try their luck with crypto. This way, when the market shows bullish sentiments in the future, you will be able to make a solid profit. And that's how traditionally cryptocurrency investments made a lot of money for a lot of people. The other benefit of buying the dip is that you could actually contribute to the uptrend, and therefore you can also drive your profits once the market returns to its previous glory. But again, both of these strategies come with a lot of risk, and that has always been the case with most investments. But with cryptocurrencies, that risk is even higher. You always need to stay updated with cryptocurrency news, and you also need to understand historical trends, even though historical trends might not mean a lot for cryptocurrency investments, considering the fact that these are driven by the hype surrounding these assets. But if you are an investor holding on to your investments, you did not lose any money even if the market is showing bearish sentiments, because you will only lose money if you sell your assets during a bear market, which you should not do, considering the fact that Bitcoin has always given excellent returns over the years, and when you look at history, Bitcoin has always showed bullish sentiments right after a drop in price. This way, there are high chances that you can make a lot of money if you decide not to panic and sell your assets during the crypto bear market. In the end, what goes up must also come down. That's how things have always been, especially with the crypto market. Analysts also predict that Bitcoin might fall to the $20,000 range and can stay there for a while before any significant upward momentum again. The stock market affecting the price of Bitcoin might not be something Satoshi Nakamoto, the pseudonymous creator of Bitcoin, had in mind, but it's the kind of price that cryptocurrencies like Bitcoin have to pay for becoming more intertwined with the global finance system, especially with so many people now getting into cryptocurrency investments. The bear market might be an opportunity for some, but it can also get quite risky because of the fact that cryptocurrencies do not have any intrinsic value, and these assets are not backed by any tangible assets. Keep in mind that this is not a financial advice video. Any investments that you make with cryptocurrencies must be made at your own risk because the cryptocurrency market is extremely volatile. Newer cryptocurrency projects are a lot riskier than the well-established cryptocurrencies like Bitcoin or Ether. So invest the money that you're willing to lose and invest in assets that you clearly understand. Everything is much more uncertain in the cryptocurrency market. If there is favorable news, the price of the assets will skyrocket. And if it's not, then the price goes really low, which is why most investors don't care about a bear market in crypto, considering the volatility. But the same is not the case with the stock market. Not every asset that goes down will go up in the future, especially those newer tokens with no real-world utility and no strong fundamentals to back them up.